Hello there, Lee here from Trading College. On this video, we're going to talk about stop loss orders, and we're also going to talk about trailing stop loss orders. That's when you're locking in the profits as the trade goes in your direction. I don't know what it is about stop loss orders. They seem to be quite challenging for a lot of people. I always hear the story of, well, I got stopped out by a few points and the trade went in my direction. And most of the time when that happens, when you get stopped out by a few pips, you know, it really does hurt, and then the trade takes off, and 100, 200 points later, you are chasing it and doing things that you shouldn't really be doing in the trade because it's already gone without you. And I can understand the pain of getting stopped out by a few points, and believe me, it happens to absolutely every single trader, or it's happened to every single trader in their trading career. So let's talk about stop loss orders. The initial stop loss, then we'll get on to trailing stops. So we've got crude oil here. This is the latest market where we've gone absolutely from 72.50 all the way up to 84. Okay, well over 1,000 point move there in oil. It's been green all the way up. Now, with our pro trading system, that would be our entry there, 72.54. A green candlestick is where buyers are stepping in. Our stop loss order would be 70.32. Now you can adjust that as well. There's two settings. You can adjust that on the pro trading system, and it will do it for you and put an optimal stop in place. So you don't need to do anything. It will tell you exactly the best place to put a stop, okay, to protect your trading account. And let me say, having a stop in place is good because you are protecting your trading account. But on the other hand, if you're continuously getting stopped out of the trade, then you're going to just, the account's going to reduce in size, and it's going to reduce gradually over size. Okay, so for me, if you haven't got the pro trading system, what I would be looking for, and there's several things that you could do here, and please maybe think about these or test them going forward. Let's say you did enter at the same time as us here at Trading College, 72.54. Now these lines here are called moving averages. All right, so nothing to do with the system. It's separate from the green and red candlesticks. But what you could do is, if you find a place to enter, you could put your stop underneath. So if you're going long, the stop is underneath the price. You could put your stop below the next major moving averages. In this case, it would be just in this area here. So if you're entering on that day, you look down, there's the major moving averages, your stop is just sitting underneath that zone there. You could go out a little bit further. Now, one of the things I think is important is I bet that if you had wider stops, you would be in more profitable trades. So that then comes down to position sizing. If you've got a very good position size, but your stop is really tight, the tighter to the price, the current price, the more chance you're going to get stopped out. Okay, so maybe think about what makes you happy. Is it making money on the trade, or is it the amount of money on the trade? So think about that initially, because what I mean is that maybe reduce position size. So let's say if you're doing a spread betting account in the UK and you're going long £10 a point, we're just making up numbers, maybe do £5 and £6, but have a wider stop, 1% and 2% risk, but get that stop wider. You've got to look at your stats as well. If you're having some good winning trades with wider stops, then we can do some really good things with you, because what could happen then, we could add to the position and add £5, £5 as the trade goes in that direction. But that's a completely different training video. So think about the moving average stop. That's a popular one. Put it under the next major moving averages. And if you feel that's too tight, then maybe reduce position size and get your stop underneath here, because what most people want is to make a winning trade, because that then gives them the confidence. It's not so much how much they make in the trade. The more experienced you become, the more it becomes for me and more experienced traders, is that the amount of money they're making on the trade. Okay, but when you're new, it's all about having a winning trade. So think about that. Don't choke the trade. Don't get your stop too tight, because as soon as that stop's too tight, dramatically increases the chances of you getting stopped out. Okay, another thing you could do is maybe use some Fibonacci. If I just draw a Fibonacci retracement here, let's say there's the entry. there's the 38.2%. I've just randomly drew a retracement from where it would the low to where the current price would be where you're getting into the trade. So we've got 38.2%. You can maybe stick a stop loss underneath that zone right in there, and that would work okay. So there's a couple of techniques that you could use there, and maybe look for just major areas of support and resistance and just come away from those support areas a little bit. And also think about round numbers. Look, you've got $70 here, $72. Price likes to bounce off of those big psychological round numbers. Don't put a stop loss at 72.01 or 72 or 72, 72.10. Put it below. Go below 71.89 and just get it out the way of that round number. Okay, so that's 3 techniques that you could do there. Now, when we go into the trailing stop, there's several things I want you to think about when you're going to get into a trade. The first thing is, are you going for a big profitable trade? Is it going to be a big move? Now, you don't know that, do you? But we can use our storyteller indicator, it's not on here at the moment, which measures low volatility, then that big potential big trade. And if we get a nice signal with our storyteller, we're going to go for a big move like the crude oil trade here. So think about when you're getting a trade, is this going to be a big move or is it a small move? When prices get stuck inside moving averages, it's small moves. When price gets outside moving averages, it can be big moves. Find out where those support and resistance areas are. Price loves to be attracted to support and resistance. This is a major top in crude oil here, or a top in area. Doesn't mean it's going to top out, but it could go even higher. But price loves to be attracted to these areas. Look at the big round numbers as well. All right. So are you going for a big move? Now get it into your head psychologically that you're going for a big move. Let's say you're going for a 1,000-point trade or whatever. On an FX, you might be going for 300, 400, 500 pips on this trade. But get it into your head, because if it doesn't, if you don't get the big move, then psychologically you've accepted that better than if you're not planning that big move. If you're going for a small move, just get out the trade once it hits the profit target. Now what we do when it's a trailing stop, and this is going to make you into a better trader and make more money. If you can sit on your hands when you're going for a big move and not get faked out the trade, then you're going to make more money, which is going to build more confidence, and then you're going to be more confident in your trading, and you're going to see that account grow. Now, we don't leave it to chance. So what we do, we just turn on the trailing stop. So in the settings here, we go to trailing stop. Okay. Now, once I turn that on, I'm not then thinking about where to put it. The machine does it for me. So as the price moves away from the current, there's our trailing stop at the moment, 81.38. Now I can move that tighter with the machine. I can change the settings and it will get it as tight as I want it to get it. But the machine automatically does the trailing stop for you, and it works really well because there's no second guessing. Okay, and as we come into these profit targets, you can peel some of the profits off if you want to. But to really grow the trading account, what you need to do is just move away from get out of the way of the trade, let the trade progress, trail your stop. And if you're new to trading, if that's your entry and that's your stop, as the price goes up, you move your stop and put it into a trailing stop. It means you can't lose on the trade. Okay. Now, once I'm in a trailing stop, 81.38 here, I'm nearly at 1,000 points profit if it comes down and hits that trailing stop. But I would like to, because it's gone up into a major resistance, I'll change the setting and it will just automatically give me the number for my trailing stop, and it will put it much, much tighter. Okay, so it will be 1,000-point trade. So the system will do it for you. The system, ProTrain system, automatically puts the stop loss in place for you, and so it takes away that emotion. Well, does it really? Now let me tell you, anyone says to you that there's no emotion in trading, then they're not talking correctly, guys. Okay, while there's money involved and you're a human being and you've got a pulse, there will always be emotion. You will always have emotion. It just gets easier the more experienced you become as a trader. The emotion, you've seen it all before, and it's much more enjoyable the more experienced you are and the more hours you've spent at the screens. So trailing stop, you could do the same. You can trail it behind, the major moving averages if you want to. Now, when price gets too far from the smallest moving average, it's likely to revert back to the mean. So always think about that, okay? So if this is the price here and this is the next moving average trailing the price, once it extends away from price and it runs away, it sort of falls out with the moving average, it will then be pulled back and revert back to the mean. So always think about that. If the price pushes really higher very quickly, runs away from the moving average, you want to be banking some of those profits. All right, trailing stop. Maybe think of a moving average. We use our pro trading system. We don't need to even consider where to put those trailing stops because it's all done for you. So this is a lovely crude oil trade, and it's these big trades like this where you've got to try and sit on your hands, and it can be tough. It is tough, and it's just this trade I'm in now. If I show you the trade that I'm in actually as we speak, I'm up about $2,000 on this Dow trade, but a sell signal here. And it's pushing down really nicely. We're trailing the stop, but I need to sort of adjust that stop a little bit tighter, and this is a big market, 35,000, 36,000 priced index, the Dow Jones Industrial Average. But I'm doing my best. I've got a sell signal here. I've got targets down here. Really, I should go off and play golf, get my stop to break even and let the trade play out, because sitting here just watching it go up and down is going to fake, not so much myself, but it will fake most people out the trade, okay? So, hope it helps. Please give us a thumbs up, subscribe to the channel, guys, if you're watching this on YouTube, and so we can grow our channel and give you more education like these videos here, and speak to you soon. Take care now.